Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, glad to have you back.
Jim, it's a pleasure.
Last weekend, you gave a presentation at the Metals Investor Forum called Bracing for the End Time. What was that all about?
That Bracing for the End Time title referred to a number of different end times. The one that was of immediate interest to me was the end time that seems to be facing the resource juniors. Traded value has dropped to like $10 million per day. It's absolutely pathetic. Of the 1,200 or so juniors listed on the venture exchange, half of them have about $2.4 billion left in their treasury. The other half owe about $2 billion. That is never going to be paid back. But what really got me going was the realization that in 2020, every boomer will be 55 years or older. And that's a problem because the Canadian brokerage industry deems resource juniors to be unsuitable for anybody who is aged 55 and older. And what that means is if you're a full-service broker and say you've had a client for decades, and you have a good relationship, and you know your industry, and you've always given advice to your client, the moment that client turns 55, you are no longer allowed to take an order from that client, even an unsolicited one for a resource junior, because these are deemed suitable. You can flog an overpriced cannabis stock to them, some $40 canopy thing that's going to go to zero, but that's okay. Those are suitable. And what that means is the boomers next year, if they want to trade the resource juniors, they need to go to a discount broker where they are effectively on their own because they're not going to have a sort of an industry expert such as a full-service broker to help them stick handle the pitfalls and find the good stories that are out there. Now, there's another problem that's wrong with the juniors, why I think they're facing an end time. The banking establishment, in order to accommodate the concept of competition, they allowed multiple order platforms to flourish. And once you had multiple order platforms in addition to the additional stock exchange one, you had a problem with short selling because when you put in an order, you have an algorithm that looks into all these different order books and figures out what the best way to do it is, and what the best way is what gives you the best price plus the best fees, because a lot of these platforms, they pay fees for pushing the order through them. And so these orders go into the system in a manner which is kind of hodgepodge, and as a result, you can never tell whether an order got executed at a price that was higher than the last different price. And that used to be called the uptick rule for short selling. You could not short sell a stock at a price that was lower than the last different price. But to get rid of this fact that you could never prove that you didn't break this rule, they simply eliminated the uptick rule. And so now we have a situation where the banks have day trading accounts which monitor the system for incoming risk capital, and they swarm in there and just sell short stock that they don't own. And because they intend to be flat at the end of the day, they don't need to borrow the stock either. So the banks have set up a risk capital stripping system which has a profoundly negative impact on the resource juniors who get their market moves through events, such as a news release reporting results from some drill program, or say a John Kaiser recommending a stock because he thinks it's undervalued, relative where it should be. So in comes the buying. They know it's going to be short-lived, and because they also know that the audience out there doesn't really know how to quantify the size of the prize and adjust that for the current stage of the exploration project, there is no fundamental value for any of these juniors, at least as perceived by the market. There is just relative value. It's either going higher in the case of a positive news release or lower in the case of a negative news release. But when you have this systemic algo-driven short selling entered the equation, well, once the incoming capital is exhausted, the short sellers can continue to sell on a downtick, lean into the order book, and all the longs who thought this was good news and were happy not to sell because they feared the stock would bump up and then settle back at a higher price, they despair and sell their position, which enables the algo traders to strip out, to flatten out their position so that they're no longer short at the end of the day. This is now institutionalized for the resource juniors, and with the boomers now completely on their own, we have a serious problem with regard to the resource juniors' viability. Now, in my talk, I argued that we can't rely on these boomers on their own, and the boomers really don't know how to apply things like discounted cash flow model and an uncertainty ladder and come up with a fair price range. And there's certainly no place to share any of this. The companies are not allowed to do it because that would be a forward-looking statement. They can do it when they publish an economic study such as a PEA, but that's like millions of dollars and years after the fact and too late to make a difference. And what I argued was we need to bring the post-boomers, which is everybody born after 1964, into the equation. And the problem with the post-boomers is they really don't know anything about the resource sector. If anything, they see mining as something evil that should be banned, even though they rely on all the physical goods in the world that come into existence through mining. But there's no gateway for them to understand how this works. And on top of that, they tend to see gold as something that is for the boomer types who are already in end-timer mode, and they're very negative about the future. Their own mortality is looming. So the post-boomer generation, has had a negative attitude towards the resource sector. And in my talk, I argue that there's something that has changed. Gold is no longer a political tool for the old gold bug group, which was worried about fiat currency debasement and hyperinflation, all related to big government stuff. The gold upside potential going into, say, $2,000 to $3,000 range, which would take the $9 trillion up into the more $20 trillion value for that asset class. This is going to happen because of uncertainty, because more and more people are going to want to use gold as a hedge against this uncertainty. And you wonder, okay, why aren't the juniors doing better? Gold's gone from $1,100, to almost $1,500. Everything is better, but the juniors look deader than ever. And that's because the traditional audience for the junior, these are the gold bugs, they have placed their bet on Donald Trump and his policies. And the uncertainty that is the basis for expecting gold to be repriced higher, that is as a result of policies he has set in motion. And even if he should not be the president a year from now, a Humpty Dumpty event has happened. There are processes now underway which make the world a very uncertain place. And this is something that needs to be sold to the liberal half of the boomers. They right now haven't yet realized that gold is the place to go. I mean, once they understand that for your traditional gold bug boomer, a thumbs up for gold is a thumbs down for Trump, they could hop in there and adopt that about these policies that Trump has set into motion. But for the post-boomers who are stuck with the long-term consequences of all these policies, including pretending that climate change is a hoax and is not really going to make any difference, we need to sell to them this idea of gold as an uncertainty hedge, that gold is not something to be shunned because cranky old boomers are the ones who have liked this for the past 30, 40 years, but that for you, this is something where you can hedge against this outcome that you are dreading. And the end times sort of psychology that permeates both groups of generations is this of light at the end of the tunnel shrinking. But if gold moves to 2,000, that's a 33% gain. If it moves to 3,000, that's a double. Whoop-de-doo for the post-boomers who don't really have as much money as the boomers. The boomers do. What they need are bigger gains, and that's where the resource juniors come back into play, because a real price move to $2,000, $3,000 range has a massively leveraged impact on a resource junior, which has a deposit that doesn't work at the current price, but even for exploration juniors for whom the cutoff grade as to what counts for a meaningful discovery drops substantially. And this puts us into the arena of 10, even 100 baggers for a resource junior in the event that we get a move such as what I'm talking about. That's a real price move, a relatively modest percentage move, but one with profound impact on the juniors. But how do we get the resource, the post-boomers, interested to feel comfortable that they understand what's going on? And how do we educate all these boomers who are now abandoned by their brokers as to in terms of how to think about the resource juniors? And I've been preoccupied with this problem for a long time, and came up with the rational speculation model and outcome visualization. And 4 years ago, Andy Gregg, who used to head Bechtel's global mining unit, saw the potential of the story and bankrolled the seed capital for a startup called the Share Collective, which is an online platform which allows one to fill in a form and imagine a deposit, and it'll run the discounted cash flow model and adjust the result according to the stage of the project. And then you can just share it into a public space for others to see, and then you can see what, based on that projected outcome, what the fair price range of the junior would be. And something like this is necessary because the public doesn't know what the fundamental value is of a potential outcome. And that gives we're never going to get the uptick rule reinstated. We're always going to have these capital harvesters leaning over the market. But once the ordinary public can see what the fundamental fair value range is based on a consensus driven perception by the wisdom of crowd that's following this will put an end to this one-sided downward bias for the resource juniors. Now, these guys worked on this for 2 years, produced a pretty good outcome visualization tool, but then they realized this thing is not built on a platform to scale to something like what John Kaiser is talking about, which is an online community of it's like a galaxy of several thousand companies, each one of them like a star orbited by planets, each planet a project, and each project capable of being colonized by members, individuals choosing to follow that planet project, and then picking which of these, making or even picking the favorite outcome, and everybody else can look in from afar. And this is something that is perfect for the post-boomers who don't just want to be passive gamblers in any space, whether it's the cannabis space or the resource junior space. They also want to be influencers. They want to be seen as influencers. But when they realized, a year ago that this thing was built on the wrong foundation, they brought in Mark Montgomery as the new CTO. He's rebuilt the foundation, and they're now ready to build the next stage. A fundraising event is happening. So hopefully over the next year, we will see my dream of the Share Collective as this new online community that gives structure and ends this end-time mentality with regard to resource juniors a new life. And an example of this that I gave in my presentation was Nevada Exploration Inc., which has a land position called South Grass Valley in Nevada, which has the same sort of size and footprint as the North Carlin district. And this stock trades at 20 to 30 cents, 100 million shares sort of fully diluted. And the question everybody has, well, how should it be priced and where can it go? And you plug that into the Share Collective machine and put in, say, a Cortez Hills deposit, something that's 5 million ounces. What would that be worth if it were discovered today at the current gold price? And that number is about $2 billion. So you do this kind of outcome visualization. You share it and everybody looks and say, well, stock could go to $20 if all of this came together. But it's not going to do that overnight because you actually need to go through all the exploration stages to demonstrate that this might happen. But you have a potential 10-bagger to $2 if it starts to look like this is all coming together. And as you put enough money into it and show that this is reality, you could see, something in the $10 to $20 range. But this story is even more exciting because the company has now published all the results from the work that they did in the past year. They drilled 11 core holes on a blind desert-covered target where there's no outcrop anywhere nearby to show there's anything interesting. This play is even outside of the area of interest box that Newmont and Barrick drew in northern Nevada to limit where these guys can do something independent. Anything in the box they have to do together. This is even outside the box, so it's a completely area deemed unprospective for anything. But what if all the geological framework the company has outlined, it does indeed support something like the North Carlin District, which has 80 million ounces in it. So now you have a story that's a potential 1,000-bagger if it starts to come together in this manner. And this is the type of story that is suitable for post-boomers because they're going to have, their $500,000, $2,000 that they can gamble on this sort of thing. And they need to be able to see this potential, see how it evolves, and see how these multiple valuations are possible. But in the current environment, it isn't really possible. So I'm optimistic that by the end of next year, we'll have infrastructure in place that will allow the post-boomers to roll up their sleeves, fast-track, learn how the resource sector learn. Even the boomers are going to figure it out and get into the game. And we will have this end-time nonsense with regard to the resource juniors put to an end. And, of course, you can tell how difficult the situation is because Nevada Exploration Inc. right now is trying to raise $3 million for a 9,500-meter, 23-hole drill program, RC drill program, to test 4 distinct targets that emerged from all that work in the past year. And the fact that they haven't done you just tells you how difficult this market is, and it's largely because it doesn't know how to quantify the size of the prize if it becomes a reality and how to discount it to the present stage of uncertainty.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, in your presentation to the Metals Investors Forum, you also talked about lightweighting as a theme that appeals to both boomers and post-boomers, with niobium and scandium as example metals that juniors can chase. Can you elaborate?
Well, one of the highlights of my talk was a slide in which I presented the classic runaway tram story, and that's one where you have a tram, it's on a track, it's running away, and there's a person, say a young person on the track where the tram is heading, and you're in a position to throw a switch to put it on another track, but on that track is an older person, a retired person, and the philosophical problem is one of, well, what is the right thing to do? Just let that young person get crunched? Or do you sacrifice the older person who has, lived a full life? And it's a complicated problem. It's also got a huge information aspect to it. But I respun it to illustrate a major conflict that is now out there, and that is the tension between the post-boomer generation, which will be impacted by runaway climate change, and the boomer generation, which will not be impacted because they will have passed away well before the consequences of climate change are here. And the problem is that by throwing the switch, you're not destroying the boomers, but you're inflicting upon them a diversion of resources. The reliance on fossil fuels is convenient and cheap. And for the post-boomers, the question is, why should we bother with this climate change stuff if we don't even know that it will be effective? Maybe the thawing of the permafrost is already on a runaway track, and when it hits that trigger, it's absolutely hopeless when we add methane to the carbon dioxide. Why should we spend money on renewable energy and all these more expensive technologies during the interim, which will be at the expense of our well-being? And that's a conflict that's playing out right now, and you're going to see a lot more tension over the next year, especially in the U.S. Presidential election, because the symbols for the two groups are Greta Thunberg for the post-boomer generation, who's going to live long enough to experience the consequences, and Donald Trump, who born in 1946, is among the oldest boomers out there, who denies climate change, who says we should do nothing about it and all that. And this is going to become an ever bigger problem. Now, the lightweighting is a solution that doesn't require a sacrifice by the boom inflicted on the boomers, because lightweighting involves using a metal as an alloy to make steel lighter, in the case of niobium, or aluminum lighter by making it, well, you actually make it stronger, and Scandium does it for aluminum. And if you're able to do this, you reduce the amount of energy needed to move anything like a boat, a train, a car, an airplane. So investing in something like this does not harm anybody. And so I suggested that one of the areas that the post-boomers and the boomers can both embrace is to look for stories that involve lightweighting, and the two key metals for this are niobium and scandium. And the example I used was Niobium metals, which we talked about a couple of weeks ago. They have the James Bay deposit in northern Ontario. On Monday, there was an important meeting held in Moosonee by the Moose Cree First Nation. They reviewed an environmental impact report that had been put together by a Saskatchewan outfit that's actually owned by First Nations, and its specialty is radioactivity because of all the Athabasca Basin operations, which are in First Nations jurisdiction. And this report concluded that the niobium project does not spell any radioactivity risks to the Moose Cree First Nation, and this had been a bugaboo that the prior chief, who got ousted this year, had been raising, that if you turn this into a mine, everybody's going to die from radiation poisoning. So this was unveiled, had a good reception, and so Niobe and the Moose Cree First Nation are now going to sit down and work out what they call a protection agreement, which is basically like one of these agreements which clarify that the interests of the First Nations group will be part of everything that the junior does. And if they can get this taken care of by Christmas, then Niobe will have the green light, the social license to initiate a drill program, to take a metallurgical sample and do some additional confirmation of the grade of the higher grade core that they wish to underground mine. And then this becomes a story, a feel-good story, because right now most of the niobium, 80% of it comes from one giant mine in Brazil owned by CBMM called Araxá. The next best mine is Niobec in Quebec, but Niobec can't grow bigger. So Brazil itself has its own Trumper type person in the form of Jair Bolsonaro, somebody who doesn't really care about fires in the Amazon and is also a climate change skeptic. So who knows where Brazil itself will end up and how reliable supply from Araxá will be in the medium to long term. So finding more niobium deposits and developing them, that's a story linked to this lightweighting idea that appeals to all sorts of groups. So niobium metals, we're still not in the green with regard to the social license, but we're maybe a month away from finding out that this story is live. The other one, Scandium International Mining Corp, which is my favorite, that one's going through a rough patch right now. It has sunk below 10 cents. There has not been any news about developing the offtake market. And unlike the case of niobium, where the market is already $3 billion a year and growing, the offtake market for Scandium is quite small, maybe 20 to 30 tons per year only, and that is mainly because there is no giant rich deposit like Araxá where you can produce this stuff on a primary scalable basis. And that changed in the past decade with discoveries in Australia. Scandium's International Ningen project is one. It's the most advanced. They have a mining lease, and they've been busy developing the offtake market. And of course, this is a growth industry. This could go to 1,000 tons per year by lightweighting aluminum in many applications where other alloys, such as lithium, that are not really workable. So making Scandium a reality, that's something that it's not going to end climate change, but it could make a difference because it will result in the reduction of carbon dioxide emissions. So again, Scandium is something for the post-boomers to embrace, to get into. The Scandium mining published its financials last week, and they show that it's out of money. So there's now a crisis in the market as to, well, how are they going to finance that? There's something sort of going on behind the scenes. It's not clear what it is, but it has resulted in an opportunity to buy stock below what the Evanson family bought it at. They own about 70 million shares. What Andy Gregg bought his 23 million shares at around 10 cents. So there's a window of opportunity here. 45% of this stock is owned by the insider group, so they're not going to let this disappear. So whatever is the cause for this sudden collapse of confidence in the stock, it is a temporary one. And this company is still in the forefront of being the first primary scalable Scandium producer.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, Verde Agrotech is also having a rough time in the market during the past week. Is their effort to sell super green sand to Brazilian farmers as an alternative to imported potash a bust?
Verde Agrotech was trading sort of at the 60-65 range when they put out a relatively short news release describing the results of the 9-month interim financials. And what they did wrong was put in the headline a statement that they will not achieve the stated sales target of 200,000 tons for 2019. Instead, it will be 110,000 tons, 45% lower than projected. And so the market said, oh, the product's failing, it's not really moving, what is going on here? And so it sold off down to 45 cents. But the reality is, if they had put that statement at the bottom of their press release and explained why they have a lower production for this year, people would have ignored that. And what we have here now is an opportunity to buy the stock at a price that's even lower than what insiders paid in a financing earlier this year. Back in March, when they did their annual financials, they had about 50,000 tons left from last year, stockpiled material. Last year they started production of super green sand, but they had teething problems with their plant facility. Moisture and that caused gumming up in the feeders, and they had to sort that out, and so they were not able to fulfill all the orders that they had. Their mining permit is for 150,000 tons per year from Pit 1 and Pit 2, which they truck to this plant. And so they said, okay, well, we have that 50,000 ton stockpile left from last year, and we'll crank through 150,000 tons that we're allowed to mine. So presto, 200,000 tons is what we predict we will do. What they did not really predict correctly was selling a larger amount of this new material to hundreds of farmers requires a very well-coordinated, systematic sales effort. They hired an individual to do this, and he had a couple of assistants, but they failed to get the orders needed to meet that 200,000 ton target. And the problem was, some of the farmers who had taken the material, many of them did repeat orders, and this is a key thing. Do they like the effect that Verde slate, the super green sand, has in place of potassium chloride, their traditional potash fertilizer? Do they see that it works, and do they want to continue to do that? But apparently, a lot of those farmers didn't even get a follow-up call. It's like, do you want to order another batch? And so they just went back to the easier-to-do potassium chloride. So the company's teething problems this year was adapting to a larger scale marketing, and the CEO, Chris Veloso, has taken his lumps. He's gotten rid of the salesperson that he put in charge. He's purchased for the company one of these Salesforce systems that allow you to track all of this on a much more efficient scale. And so hopefully for 2020, this marketing issue, this marketing bottleneck will not be the reason. Now theoretically, they can only produce 150,000 tons next year also. But they have upgraded the plant to 500,000 tons per annum capacity, and they have 333,000 tons of extra mining permit in various stages of application. And since the primary application period for Brazilian farmers, their summer is our winter, it really starts at the end of our summer. So they got 6 months to get the rest of these permits, get the marketing campaign fixed up, and turn this thing next year into a successful growth story where there are no more of these pitfalls to do with technical commissioning issues and with marketing issues. And if they can achieve this sales target, they will likely be break even. And then if they can hit that higher target of 200,000 and beyond, then we start seeing the growth story, because they have a tentative approval for a new plant for 890,000 tons per year at the Pit 2 site, which is the one that can scale considerably larger, but that of course requires them to exhaust the capacity of the initial plant. But you can see that gradually this thing is getting its act together, and the stock is cheap today, not because they failed in growing their market. I mean, it's almost 300% higher sales this year than last year. All they did was overpromise and underdeliver, and that's a sin that can easily be forgiven. They have enough money to stay in the game for now. I think by next year, if they do need to raise more working capital, the market will be considerably better. But what I like about this story is this is also a post-boomer story, a story that's suitable for post-boomers. Because what the Verdetchi slate story is all about is these billions of tons of glauconite, which is the technical name for this mineral that runs 9% to 11% K2O, which is the key potassium element. This is an alternative to the potassium chloride salt that's made from those evaporite beds that are mined in Saskatchewan and Belarus. And the problem with potassium chloride is that the salt in this fertilizer absolutely hammers the soil and kills the naturally occurring microorganisms in it. And this is a long-term problem, not one of much concern to the boomers who won't be around to actually experience, but for post-boomers, this is an issue. Historically, microorganisms have this symbiotic relationship with plant roots whose secretions result in liberating plant nutrients from all the little minerals that are in ordinary soil. That's the reason why you see for hundreds of years, for centuries, fertile land that's not been agriculturally mined. If all the stuff was being uptaken all the time, it should have been depleted ages ago. But in fact, it hasn't, because these microorganisms are constantly liberating from naturally occurring minerals the key nutrients needed. And what Verdetchi slate is, it's basically just this sort of mineral, and they had originally tried to make a processed version of it called thermopotash. Then they tried to make potassium chloride out of it, and all of that proved too expensive, and they accidentally discovered that the control plot that simply had finely ground up Verdetchi slate in it had the same positive effect on plant growth as the one with the treated material and the conventional KCl. And when they finally figured it out, they realized why. It's this interaction with the microorganisms. So now Verdetchi slate, or super green sand as they call it, is being pitched as a replacement to potassium chloride for the giant Brazilian agricultural industry, and this will preserve the soil over the long run because it will keep those microorganisms in the soil alive and keep the soil healthy and able to be fertile long after continuous use of potassium chloride will have rendered the soil absolutely worthless for growing crops. And this is something for the post-boomers who are looking for reasons to believe in the light at the end of the tunnel expanding rather than shrinking, and want to bet on something that will make them not have to feel that they are in an end times mood and need to buy gold-related juniors or something like that because of all this uncertainty about the future, and so we hope for short-term gains. This is something which they can back, which is a long-term growth story, which could actually also deliver substantial capital gains. And this is why this story is, of course, also of interest to the boomer generation, who are, more interested in profit-based cash flow growth in the near term than in the long term.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. His website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.